Let's get a move on then and connect with Niraj Kedia. He's the Deputy CFO at Finolex Industries, joining in to talk about their quarterly numbers as well as growth plans ahead. Good to have you on board. And to begin with, if we're looking at your revenues this time around, it was the highest reported revenues on a quarterly basis, up 28%. Break it down for us in terms of value and price and some of the factors that really catalyze this growth.
Yeah, hi, good morning. Thank you. So yes, the revenues have been pretty decent. These are the highest quarterly revenues that we have ever reported. And also in terms of the full year numbers, these are the highest revenue numbers. So these are affected by two things this year. One is obviously PVC prices are still high. They started coming down a bit, but still they remain relatively high from their historic levels. And in terms of volumes, I think that performance has been good. We clocked almost 80,000 tons in this quarter. This is the highest volume that we have done in the last 11 quarters. So that is the reason primarily why you see the good performance in terms of revenue.
What about margins this quarter? They dropped on account of the higher input prices. What do the spreads look like and where do you see your margins headed? In fact, what would be the normalized level that the company is targeting?
Yeah, so we often speak, there's a time lag between the PVC price changes and the price changes of the raw material, which are EDC, ethylene, and VCM. So in the November, December months, the raw material prices started to catch up. And the impact of that we see in this fourth quarter because PVC prices started going down. In fact, in India, PVC prices reduced by almost 15 rupees during this quarter, whereas the inventory levels, the inventory rates were high. But now gradually, even we are seeing the raw material prices also cooling down a bit. PVC prices are also seeing reduction for a few reasons. One is material coming from China because the Chinese economy is kind of sluggish right now. So there is less PVC demand there. So there is a lot of impetus on Chinese suppliers to send their material to India. So with PVC prices coming down, but now the raw material prices are also inching downwards. Margins, when you say an EDC, PVC EDC delta is around $840 levels as we speak today.
Sure. The other thing I also wanted to talk about, Niraj, was the quantum of price hikes that you've taken so far and what's the plan to increase further prices?
So see, in India, in PVC segment, in pipes and fitting, price is generally passed on almost simultaneously to the customers. We are right now witnessing a trend where prices are going down and they are being passed on almost immediately to the customers. But even when we had a price raising scenario in the last couple of years, we were pretty disciplined about passing on this price increases to the customers. That is the industry trend and that is how everybody works in a disciplined fashion.
Sure. But tell me, what about demand and when it comes to specifically agri pipes, say what's been the impact of the Nal Se Jal scheme on your business so far? Just wanted to understand that.
Yeah. So agri demand is highly seasonal, as we all know. We saw sluggish demand in the third quarter, but fourth quarter demand has again picked up. Even in this quarter, when we see what we have to understand, also look at it from the perspective that the PVC prices are going down. So people will buy, will defer the procurement if they feel that prices are still going to go down. But keeping that factor aside, we saw okayish or lukewarm kind of demand in the month of April. But in this month, as we see, the demand seems to be picking up and going back to very, very normal and very strong levels, both in agri and non-agri.
Going forward, where do you see your market share standing, and has the company managed to gain from the unorganized sector?
Yeah, see, the complete data of unorganized sector is not available. So it is difficult to put an exact number of market share. But yes, gradually speaking, we believe that the share of unorganized players in this segment is gradually going down, and which is being captured by the more organized and bigger players.
What is your current capacity utilization levels and what's your plan for expanding your production capacity?
Yeah. So currently in resin, we are working at 100% capacity. In pipes and fittings on a full year 12-month basis, generally the capacity utilization is 65 to 70%, which is normally the case because there are lull seasons in monsoon and all when there is very less demand from both agri and non-agri. Uh, uh, on in terms of capacity additions, see we have enough capacity. We are slightly short of what we achieved pre-COVID. So that capacity is still there, 10-15%. We can easily go there, and beyond that also we have roughly 15-20% of capacity which can be utilized. So no major reasons for us to have large capacity expansion right now. But yes, on a modular fashion, we keep on adding capacity. For instance, we are optimizing the output capacity of our extruders, so which will give an enhanced capacity on the same setup.
I just wanted to understand what the capital outlay is going to be for your future expansion, capacity expansion plans, and how do you plan to fund this?
Yeah, so this year, one thing that we are doing is we are to have more quality controls and to have a better R&D. We are setting up our own kind of a fitting facility. So that will entail some capex. But in the next 1.5 years, we will be spending roughly 200 to 50 crores in capex.
Thanks much for taking time out and joining in, walking us through your capex plans as well as the kind of solid revenue growth that the company has witnessed.